what I'm looking for, it's not that I won't invest in the company if it's a new CEO, never done this before. But if I look back over my life at the biggest successes I've ever had, it's because I've tapped into the right people. This is something a lot of investors kind of miss here, but investing is more about people than it is about products. Read and react. That's what we're doing. How to make money in stocks, right? What stocks to buy next week? How do you figure that out? These are the 7 steps that we take to determine when to buy, not when, but what stocks to buy, what stocks to put on our whiteboard. Here we go. Because what I'm going to do here is I'm going to share with you this screen right here. Okay. And I'm going to make you a downloadable copy of this with all of our processes. If you'd like to get a downloadable copy of these 7 steps, then go ahead and go onto Twitter and DM me, right? And then I'll send you the PDF file so that you can have it for yourself and you can start building your own processes. Let's start with, and you can grab a pen and piece of paper and write these things down. Let's start with the first thing that we do when it comes to investigating or doing fundamental research on a company. The first thing I look for, I don't know if I want to say first, because all 7 of these are important. And so I get to them as I get to them when I'm looking at a company. But the first thing I want to do is share with you a screen of the William O'Neill Market Smith. Full disclosure, I don't get paid by Market Smith or William O'Neill. I use these products. I'm just sharing this with you. I've been, a follower of the William O'Neill style of investing since I got in the business. How to Make Money in Stocks is a great book to read to get started if you're new at this game and you want to learn a foundation. Okay. So I like to believe that I've taken that as a guide and enhanced it for the world we live in today. And I say that in all humility. Okay. So some of these things you're going to recognize, but I'm going to look at a chart of Market Smith so you guys can see, and let's pull up Trade Desk for the fun of it, just for the fun of it. All right. You could pull up any stock you want, but this is a chart of Market Smith. IBD.com is a good source. You don't have to pay for Market Smith. There's other ways to find out this information, but I'm using this chart. I've been looking at these charts literally for 35 years in one form or another. And when I started looking at them, believe it or not, they were paper versions. There was no such thing as a computer like this. But right down here are the quarterly numbers, the last 4 quarters. You can see right here a 50 and a 43. It means the earnings had a 50% increase over a year ago, revenue 43%. Okay. So the first thing I do is I just go look at the quarterly numbers to see if there's an acceleration in the quarterly numbers, revenue and earnings. That's step 1. These are things that bring institutions into a stock. Okay. So what we want to see is acceleration in revenue and earnings. That's an easy thing you can look at. That's step 1. Step 2, I go to the balance sheet. Now, before I get off revenue and earnings, there are some stocks that are on my whiteboard that have a revenue and earnings in the last quarter that don't look very good. Okay. We're going to get to that when we go over number 7 on this list. Okay. Just because an idea doesn't have the revenue and earnings momentum that I want doesn't mean I don't put it on the whiteboard. I'm going to explain in a minute. I'm going to give you an example of a stock that's on the whiteboard when we get to number 7. And I'm going to tell you why it's there. Okay? And why we're overriding the quarterly revenue and earnings declines. Okay, so sometimes you have to do that. That's why there's 7 steps to follow. All right. But the first thing to do is I like to go through looking at the quarterly earnings and revenue, see if it's accelerating. That gets me interested. I'm a growth stock investor. That's what I want to see. All right. Then I go to the balance sheet and the income statement. Looking for And you can find some of these things over here. You could pull up the weekly version. Okay. And you get all this data block over here of information. So what I'm looking for there are different pieces of information you find in the financials, like margins. I like to see margin expansion. Okay. I like to look for days sales outstanding, DSOs, they call it. I like to look at the debt situation, right? All these types of things. I'll give you some examples of what I mean and why this is important. When I first even before I got into the business, working with my dad's been doing this since birth, right? And I learned a lot at his knee. He was my mentor. I worked with him for a number of years in New York. We were running the largest equity business in the country for some big wirehouses, working with high net worth individuals. So, one of the first things my dad ever taught me was when I was in college, he said to me, he said, son, you need to be an accounting major. I said, God, I don't want to be an accounting major. I'm having too much fun in college. Okay. I'll be a finance major, Total waste of your time, son. Finance major will be a waste of your time. You need to be an accounting major because accounting is the language of business. Okay. So I took some accounting courses, of course, and I learned the basics of the language. But my dad's told me a lot of things over the years. And I got to tell you, that's at the top of the list of being accurate. There is nothing I learned in my finance courses at college, right, that have done anything for me in the real world. But everything I learned in accounting has been helpful. So it helps you understand margins. It helps you understand. I'll give you an example of days sales outstanding, DSOs. I'm just giving you one example here. If you say to me, I don't know anything about accounting, there are some basic accounting books you can get so you know some of the key things to look for. But again, we're going to get to number 7 on this list, and it's going to help you in this area. Okay. So don't worry if you're new to this and you don't have any accounting background. Don't worry. Okay. But when it comes to DSOs as an example, okay, this is why accounting is important. Let's say there's a company that has an average days sales outstanding of 60. In other words, they put inventory into the market, they get paid back within 60 days on average. And so this company shows expanding revenue and earnings, which is the first thing I look for. That looks great. And then they have a huge quarter. Wow. The numbers look phenomenal. And the stock is down big on the earnings announcement. And you're wondering why? I don't get it. They just have blowout numbers. How could the stock be down? Sometimes it's the DSOs that had a huge quarter, but their day sales outstanding went from 60 to 90, maybe 120. So what that tells the analyst, the fundamental analyst, is that they're stuffing the channel with product and it's not moving. And that probably means in the future, they're going to start to have write-offs, okay, for inventory that gets sent back to them, product that doesn't get sold. Now, I haven't done the analysis, but as an example, you saw what happened to STX. I don't know if you saw what happened to Seagate. And I'm not saying it was days sales outstanding exactly, but if you look at Seagate, the company announced earnings, and one of the problems with earnings and the stock got whacked is that the company is out there dealing with an inventory problem, right? There's too much inventory out there, and their customers are drawing down inventory, so they're not buying any more product. And so what you'll see, in fact, let's look at the numbers, and you'll probably see this coming through. So here's the bad number, right? So here's some red numbers, quarterly, revenue decline, earnings decline, right? But if you look a couple quarters ago, revenues were skyrocketing, earnings were skyrocketing, right? And so to a certain extent, the semiconductor companies were stuffing the channel. Now we go through a recession and the end customer is working down inventories. So there's just an example of why understanding basic accounting type of rules that are important can help you understand what you're looking at when you're looking at quarterly earnings and revenues. So you got to kind of look at both things, and that's what I do. All right. So what's the next thing we can look at on this chart. What I would do is I would click on, right up here is the hyperlink to the company's website. And so the next thing that's really important to me is the management team of the company. Okay, so the third thing on the list, and I'm just looking at my list to make sure I get it right. All right, the third thing on the list is the management team of the company. What I'm looking for, it's not that I won't invest in the company if it's a new CEO, never done this before. But what if I look back over my life at the biggest successes I've ever had, it's because I've tapped into the right people. This is something a lot of investors kind of miss here, but investing is more about people than it is about products. I could show you, hundreds of products that were just the greatest widgets on earth that have gone the way of the dodo because the person running the company was a dodo. Okay? That's the problem. When I was working in Manhattan for about 14 years, and again, this is before, this is in the 90s, right? Leading up to 2000. But during that period, and certainly going back decades before, when my dad was in the business in the early 60s, the only way to really gather information from a management team is to sit down with them. Okay. So we carried a big cudgel because of the assets we were managing. I mean, we were controlling more than 300 million at the time. And so we were able to get on the phone, talk to management teams. And the thing about New York City at the time is that any company worth its salt, the management team would come through Manhattan at least once a year, and many times 4 times a year, once a quarter. And so what they would do is go to different money managers, fund managers, and sit down and have a one-on-one meeting. Could last for an hour, could last for 3 hours, depending on how deep you got into the situation. So what we used to do, we had this conference room, and we would literally meet with, I would say, 4 management teams a week. That is not an exaggeration. Almost once a day, once a week. I mean, 4 out of 5 times of the week, we would have a management team come through, sit down, give us their pitch, explain why we should invest in the company. Now, in today's world, what's beautiful about the internet is you don't have to do that, right? I live in Palm Beach now. I live in Jupiter. I can get on the internet and I can watch any analyst meeting I want. I mean, they're all over the place. We'll get to that in a minute. Okay, that's another step here in the process. But after sitting through meeting after meeting after meeting, and sometimes I'd ask my dad, why are we meeting with this company? We got no interest in this business. He would say 2 things to me. Number one, we're doing it for the repetition. The more management teams you meet, the more people you sit across the table with, the better you get at judging people. And investing is about people. It's not just about product. So I learned that early. So repeated management. And one day, remind me at some point. It's a long story, so I'll tell you at some other time. But I sat across the table from a chief executive officer. It was a fascinating display of a lie. I mean, it was just an unbelievable lie. This person ended up in prison, okay, about a year later. Coming out of that meeting, my dad and I looked at each other and said, we have to short this stock like crazy. This guy's crazy, right? And we ended up owning a lot of puts, made a lot of money on that call. I'll tell you about that in the future. It's a fascinating story. You won't believe it. But let's stay on topic here, okay? So you want to find the right management team. Here's an example of what I mean. My favorite thing to do is to follow a turnaround artist. So I'm going to tell you right now an example of a turnaround artist that made us a lot of money and an idea we're looking at right now that's on the whiteboard. All right. So if you found this conversation so far helpful, hit that like button, share this video with your friends. Okay. And if you have any questions for me after this conversation, boom, put a comment down on the bottom here. All right. So back in the 1990s, met with a management team of a company called Novell. Now, Novell was a basic software company, nothing too exciting about it. The company's not public anymore. It's a $3 stock. So the CEO of the company, who was just hired into Novell, was a guy named Eric Schmidt. Now, you might be familiar with this name, but back in the 1990s, no one really knew him. We looked into his background, and he was a bit of a turnaround artist. He would come into companies, basically in the software business, turn them around, usually sell them to some bigger company at the end. So we liked his track record. We bought Novell at around $6 a share. Company got taken over around $26. That was a great trade. The next company he went to was a little known company at the time called Google. Okay? So if you simply followed Eric Schmidt, you could make a lot of money. This is what I mean when I say people over product is more important. He was so good at turning companies around. He made a fortune at Novell. And then Sergey Brin realized, you know what? We're a public company. We've done what we could do. We need to bring someone in here who's a great manager, and we're going to hire Eric Schmidt. And the rest is, history. Google is one of the greatest stocks of all time. That's an example of investing in the right people. So here's a stock that's on my whiteboard right now. You're not going to believe it, okay? You're not going to believe it. But I'm starting to do some serious work on Pinterest. The stock's been crushed. I know the story. We all know the story. It's totally done. It's toast. And yet there's a new chief executive officer right here. It just got hired. I'll leave it to you to do some research. Find out who this guy is and whether or not you think you might want to be a part of his future. We're still doing the work. Okay? On our whiteboard. ARMR Insiders, we're going to listen to the conference calls when he was brought into the company. No doubt he's already had a call. I will look for really the first quarterly earnings announcement since his tenure has begun before I buy the stock. Typically, when a new CEO comes in a disastrous situation like this, the first quarter's announcement under him, under this new guy, is a disaster. He writes off everything, the kitchen sink and everything. And the stock can bottom on that. And if his vision is right, okay? Think Satya Nadella when he took over CEO of Microsoft. You had a stock that was doing nothing for a decade, and then the right guy took over the position, and it's been an unbelievable winner. That's why management teams are important. That's the third thing that we look at, okay? Number four, I like to find something new going on inside the company. So something new can be a new CEO. It could be a new product that's, taking the world by storm. It can be a new process. I'll give you an example. For a while there, you could literally invest. This happened over the last 5 years. You could literally invest in every company that was switching its process from a boxing up of a software product and shipping it and switching that process to software as a service. Getting back to Microsoft. What made Microsoft so huge? When Nadella took over, one of their biggest changes was going from basically you would buy a CD and pop it into your computer and download Windows or Word or PowerPoint or whatever. And they went to Windows 365, software as a service. That's one example. I know there's other things going on at Microsoft. But the change to a SaaS-based model made huge stocks out of all kinds of companies that you would have thought are just kind of, big cap names that are kind of rumbling along. How about Adobe? When Adobe went to SaaS-based model, I can list, tens of them, maybe even hundreds of them. Big cap companies that seemed to have a normal growth trajectory that were pretty boring changed their process to SaaS. Stocks went through the roof. So number 4 is something new inside the company. New product, new management, new process. Okay. Number 5. we like to look for industry group macro changes that make the stock, the individual company, more powerful. As an example, I think the future of warfare is drone technology. So that's a macro idea about drones. So what we want to now go look for, just as an example, I'll throw up here. We're going to look at a company like Elbit, for instance. Okay. So Elbit is probably the number one drone company in the world, in my personal opinion. It's an Israeli company. Okay. Stock looks phenomenal in a bear market. Stock looks phenomenal in a bear market. And if you'll look here, look at the earnings number. Not that attractive. These are red numbers on the earnings front. Stock's doing really, really well. Okay. One reason for that is that they're at the forefront of drone technology. And that macro event of drones becoming the future of warfare is attracting institutional interest. Okay. Another example of that would be AVAV. Okay. And I'm going to get to a minute. If you look at the terrible numbers here on AVAV, you would think, why would I have any interest in this company? I'm going to get to that in a minute. When we get to number 7 on this list, I'm going to share with you why this stock is on my whiteboard. Okay. So again, if you find this conversation helpful, if you find it valuable, hit the like button for me. That would be great. That alerts other individuals who need this information that this video is there for them. So help them out. Okay. So what was that? That was number 5, right? So there's a macro event that we like. Could be drone technology, could be cannabis stocks. Okay. There's a macro story there on cannabis. At some point, that lottery ticket's going to pay off. Do we take advantage of that macro story, and how do we do it? Right. So then we start looking for stocks that we can put on our whiteboard. All right. Number 6 is institutional sponsorship. Now, there's many different ways to do this, but William O'Neill and the MarketSmith service really helps out in this process. You can, I'll show you what I mean. You could take a look here, and over here it will show you, if you were to click on owners and funds, it'll show you how much is owned by institutions, 58% in this case, okay? And the type of funds. You can click on show fund ownership and get all this information, okay? The idea here is, if you look at a stock, if you think you found the greatest idea since sliced bread, and you look and see that there's not a single fund that owns it, or the funds that own it there aren't many, and they're not A-rated funds. I mean, they're just kind of small, out of the way funds. Then it's not wrong. You're not wrong. You could be onto something, but you're so early that you might want to monitor this. And when you start to see funds come in, you know that the money's flowing. And now maybe it's time to elevate it on your whiteboard from the bottom of the board to the top of the board. So it's not that I won't have a name on my board because of the funds, but I watch the fund flows. Conversely, if 80% of the stock is owned by funds, who's left to put the stock up? It just becomes a market stock. So that doesn't seem real sexy to me either. So there's this sweet spot of funds beginning to put capital to work, right? But not too much capital to work. So we have a saying here on our desk that information makes money and institutions make markets. And this is an example of that. Understanding what institutions are doing and being there in front of them, but not so far in front that the race hadn't even started yet, is the key. Number 7 on the list of the 7 steps we take to determine what stocks to buy, what stocks to put on our watch list. Okay. Number 7 is listening to the conference call of earnings. Now, this gets back to my conversation where I used to literally sit down with probably at least 4, sometimes 5 different companies a week. Okay. That's a lot of companies, a lot of quote conference calls. Back then, there weren't conference calls on the internet. So you had to sit down with the management team and have them walk you through the earnings numbers. But you can do it now. I could do it now just sitting at my desk right here. Every company has an earnings conference call. And the beauty for somebody like yourself who hasn't been doing this for 30 plus years is that you can listen, and if you want to, fast forward to the analyst questions. Now, I wouldn't fast forward because I think that, and I can attest to this because I learned this way, the more time you listen to a management team, the longer you do it, you'll start to hear strength and weakness in the voice, okay? It's a real thing. And it will help you understand what's going on inside the company. Sometimes you can just hear it. The CEO's got the bit in his teeth. You know, go listen to the last earnings announcement if you want to hear what I'm talking about of Trade Desk. This is back in May, symbols TTD. Go listen to that earnings announcement. That is a prime example of a chief executive officer in his opening comments who is clearly conveying to you the enormity of his opportunity. Now, it doesn't mean he doesn't stumble. I mean, Snap imploded and, stock was down 7%, Trade Desk on Friday. And people think, probably August 8th, it'll be a terrible earnings announcement for Trade Desk. I think differently. Go listen to that conference call. That's your homework. Okay. But you can always fast forward to the Q&A from analysts because they're going to ask these key questions. Remember I was talking about days sales outstanding? There's an analyst that's going to say, hey, man, you have blowout numbers, but your DSO's doubled. What's going on? And you'll start to learn the terminology and you'll understand the business. The reason this is so important, and let's just get to this last example, and then I'll start, we'll talk about what happened last week and how we're going to invest next week. So AeroVironment is on our whiteboard. It's on the top of our whiteboard. There are a couple of issues with the company. So here are the 7 steps we take, and yet the last quarterly earnings and revenue number doesn't look very good, right? And if you listen to the management of the company, no offense, I don't mean any offense to the management of the company, but they're not the type of management team I'd want to get behind. But that's okay. They're early in the process. I would be all over this stock if there was an announcement tomorrow that a new CEO is taken over and he's coming from Lockheed Martin. You follow me? Or he's coming from Northrop Grumman, right? This is the chief operating officer of Northrop Grumman, and now he's joined AeroVironment as the CEO. What that tells you is this guy just left a cushy job at a huge company with a great pension, right? And he's gone to a startup. Basically, that's what this company is, because he sees the massive growth potential. That has not happened yet at ARMR. It may not. I'm just telling you, if you saw that news story, you would know the ARMR Report be buying that stock with 2 hands. Okay. Right now it's on our whiteboard. Why is it on the whiteboard with earnings down 71% last quarter and sales down 2%? Because when I was on that conference call, by the way, margins were down and inventories were up. That seems like it's completely opposite what I just told you about those other rules that we follow. This is why listening to the conference call is so important and understanding a macro picture. Okay, so we use all of these together. If you listen to the call, there is such an insatiable demand for drone technology. If you understand military contracting, you'll understand that a company can't land huge deals with the DoD and those types of entities without having the inventory to deliver. So the company on the last call told everybody, we are ramping up inventory like crazy. This is hitting margins right now. But it's going to allow us the back half of this year to have some big numbers. Now, you could say you don't believe the CEO. That's your decision. But I like the macro story. I think drones are the future of warfare. I understand the process when it comes to working with major governments and militaries. You can't get a big deal if you can't prove to them you can deliver on the deal. So you got to build inventory. So this is one example where the stock stays on my whiteboard. Just because inventory is going up, days sales outstanding in this case doesn't matter to me because there's a paradigmatic shift in the macro story. So those are the ideas of how I put something onto my whiteboard, how I know what stocks to watch, what stocks to buy. Those are the 7. If you want that list, go to Twitter, DM me on Twitter, and I'll send you that that PDF file so you can have it for yourself and you can start building your own rules. Okay. I hope you found that helpful. If you do, hit the like button. I appreciate it. It'll help others who need this valuable information. It's taken me years to figure it out. And I'm happy to share it with you.